please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters. Well, this is a show where we'll highlight all the buzzing stocks. As we speak, the Nifty is trading with a cut of around 50 points. Remember, some part of the fall or some part of the global uncertainty already played out in the second half of trade yesterday. So we're sitting with a cut of around 50 points, but it's not in isolation. The other Asian markets as well, they were trading with cuts of around 1% to even 1.5%. When we did kickstart trade, the Shanghai market is now down close to around 1.8%. So fair to say, we're doing a relative outperformance today, and at one point of time we had the mid-cap index as well that broke into the green. Well, Mangalam, it's going to be an interesting trading session ahead of expiry day.
Absolutely. It's going to be a very interesting trading session ahead of expiry. Looks like we have found that support at the 10,550 thereabout marks, given that there was a lot of put writing around the 10,500 level. The important part, mid-cap index, you spoke about it breaking into the green in the middle. It has recovered about 130 points from the lows, and when that happens, the broad sense that the street gets is that the decline on the frontliners is limited. So we'll keep an eye out on that. First up, all the top stories that we're tracking at this point in time. Asian markets, they trade weak as the political turmoil in Italy weighs in on all global markets. The weakness in global markets percolates to the Wall Street as well. The Sensex and the Nifty trade 0.5% lower. Mid-cap index outperforms marginally.
And Mahindra hits a new high post earnings upgrades and positive management commentary after reporting a big operational beat in its fourth quarter. Brokerages like Jefferies, Nomura, Credit Suisse, they're upbeat on the company. They raise their target prices.
Glenmark slips in trade post a subdued quarter in the fourth quarter of this year. Management says the US business will continue to remain challenging for the next 4 quarters. Price erosion in the US stands at 10 to 12%.
And Dish TV as well is in focus. It's trading in the green post pretty positive numbers in the fourth quarter. The management guides for margins in the range of around 34 to around 35%.
In earnings to watch today, ONGC expected to report a good quarter due to higher crude realizations. For SAIL, higher volumes and realizations will drive revenue growth. And for Berger Paints, keep an eye on the commentary on margins and market share with 11% volume growth. That's what the street is expecting.
Well, keep an eye out on a few stocks. You know, Just Dial has had a bit of a rally in the last couple of trading sessions. Now, that's coming for profit booking. Jubilant Foodworks. Remember, in fact, that the promoters or the management has said no, the promoters are not looking to sell out. The stock did open with a bit of a gain. Now it's come off the high point of the day. So just keep that in mind. The stock is now on the verge of moving into the red. In fact, it's moving into the red as we speak. So that's another one that you should be looking at very, very closely. And other stocks that are moving around, yeah, something like a CG Power, that stock has spiked up. It's up nearly around 2%. Majority of that move has come in the last couple of minutes. But how do you trade the Nifty? Should you be buying into this 50-point dip that we're seeing today? Ashwini Gujral joins in. Hi, Ashwini. Good morning. Your trade on the Nifty as we speak?
See, the declines are mild, given the global context, etc. And we had fallen already yesterday. Today, I would term this as a no follow through on the downside for the moment. And with that in mind, I think you should be getting long on Nifty as well as Bank Nifty. The good thing is that your stops are very clear. The morning low on both these indices can be used as a stop. Also, NBFCs are coming back strongly, which means that they went down in the morning also. But again, follow through is kind of missing. So if I have to take a call, there's no point being short here because you are already sitting on a decline. But what happens if people don't get follow through? That is the more interesting trade to take. So having said that, Bajaj Finserv is a buy with a stop of 58.50, target of 6,000. M&M Financial is a buy with a stop of 478, target of 500. And Canfin Home is a buy with a stop of 386 to 390, target of 406. Important bit here is that you will have to hang on to these positions till the low of the day is taken out, because once the bears can't push it lower, then the short covering will happen quite suddenly. So for the moment, just take long positions, put your stops and sit tight.
Absolutely. Put your stops and sit tight. So the lows of the day on the Nifty is 10,558. This is the Nifty index that I'm talking about, spot, as well as Nifty Bank. It's 25,980. So 26,000 thereabouts is where Ashwini is suggesting to put a stop. Ashwini, you spoke about a couple of stocks. Just a word on PVR. It's had a rough month. In fact, it turned into the red for the year. This month itself, down close to around 9%. And today it opened fairly well in the green, now has fallen from the high point of the day and currently is at the low point of the day. Rather, did not open in the green but has extended its cut. Do you think there's room for more, or maybe just hold on to it?
See, basically, if you see kind of a longest chart, it's in a range of 1200 to about 1550 after having moved from 200 to 1600. This is a sideways year for PVR. I don't think great things should be expected. The day it starts to cross this 1500, 1550 zone, the rally will restart here. But I think for the moment, PVR is quite sideways.
All right. Thanks a lot, Ashwini, for joining in and giving us all those details. He has made his point fairly clear. Stay long as today's low is not breached. But let's move on. HUL reported a double-digit volume growth in the backdrop of the fourth quarter. How sustainable is this growth in the FMCG industry? In fact, all through the fourth quarter, we've seen most of these consumer companies be very upbeat on the growth outlook from the rural perspective for this year. On the back of this, we have Nielsen, who's come out with a report that says that Indian FMCG is now in a stable place. CNBC TV18 spoke with Samir Shukla, who's Nielsen's South Asia Executive Director. He said that industry growth may not be as high as 2017, but it is going to see strong sales nevertheless. So let's hear the word coming out from Nielsen.
We are still in good times. So while growth numbers may go up or down because of base effect, either on shipments or earnings or because of the consumer offtake, see, in quarter one of 2018, our estimates, Nielsen estimates, have been in the range of 11% plus, which is a decent growth. It's a double-digit growth.
Yeah.
Now, even in quarter two of 2018, which is the current quarter, we are expecting that industry should grow in high single digits, close to 9% or so. And full year estimate for 2018 is also in double digits. So I would say that the growth momentum is intact and it's largely led by rural growth.
No big moves on the markets from the time that we started this show, just still 0.5% down for the frontline indices, but a couple of old economy stocks, they're moving higher. NTPC in fact has moved to the high point of the day. Ashwini was speaking about NBFCs doing well, so Bajaj Finserv too has moved to the high point of the day, has had a last few rough trading sessions, so was weak, and now seems to be gaining some momentum, so that one has moved to the high point of the day. Along with that, from the frontline space, or rather mid-cap space, we have something like a Torrent Power, which has moved in the last few minutes, so that one should come up for you as well. And BHEL continues its up move from yesterday. Remember, the company posted their results, and the order inflow was something that the street liked a bit. That stock was up 5% yesterday, off yesterday's high, but has resumed its up move today with a gain of about 2%. However, the mid-cap index still lower by about 0.25%, outperforming the frontline indices. So we'll keep an eye out on how individual stocks move out. Any stock that you're spotting, Nigel?
Well, a couple of stocks. Looks like Bata should come up for you. I think it's moved higher in the last few minutes. So pull up the intraday chart out there. I think that stock should come up for you on the screen. It's moved higher. Just trying to find a couple of other gainers. CG Power we've already talked about. Torrent Power we were talking about as well. So keep an eye out.
Bombay Dyeing has suddenly moved higher. So Bombay Dyeing should come up for you as well, up 3% as we speak. And from the smaller space, we have Astra Micro, which has suddenly moved higher by about 8.5%. Their adhesives business did well in the fourth quarter earnings. So we'll keep an eye out on all these individual stocks, but the one stock on our radar is Thomas Cook on the back of their results. Seasonally weak quarter for travel companies. Remember, Jan to March is seasonally lean. So to discuss the outlook for FY19, we have Madhavan Menon, the CMD of the company, who joins us now. Thanks a lot, Mr. Menon, for joining in. While for travel companies, it's a seasonally weak quarter. You've had an eventful one with, the demerger of, or rather, the decision to distribute Quest shares, and that is reflected in your bottom line as well, the exceptional there. So let's talk about your ex-Quest business in FY19 now that this is gone and done. What is your target in terms of revenue for FY19 coming from both organic and inorganic business? You've done close to around 2,500 crores in this quarter. Quarterly run rate for the next 4 quarters?
Good morning, Mangalam. I think let me sort of declutter the data that we've put out there so that there is some degree of clarity on what we've done. So first of all, I think this particular set of results contains a lot of one-offs, and we need to remove those to ensure that we see a like-to-like. So if we look at on a consolidated basis and we remove the non-cash profit of 5,800 crores that we got as a result of moving the Quest shares from the book value to fair value. The second one was earlier this year we made a couple of acquisitions and we have taken a couple of write-offs to clean those books. So that's approximately another 22 crores. A third item is that our quarter, the January, February, March quarter, consolidates Quest for 1 month and deconsolidates Quest for the other 2 months. Now, if I were to take comparable numbers, our profitability, despite being an investment quarter, has actually grown by 9%. Now, this is attributed to a variety of reasons. First of all, our inbound business had an excellent quarter. If you look at the Sterling Holiday Resorts, their losses actually halved.
Right.
Thirdly, despite being an investment quarter in the travel businesses, we've actually managed our costs much better. And we had a decent October, November, December quarter in the travel space. So we were actually able to close the files and book profits in January. So, you know, overall, I think it's been a good performance on a like-to-like basis. But as you very rightly said, these numbers are cluttered up because of the one-offs. Now, to answer your question on the way going forward, I think if I look at my forward bookings, which is in the travel business, the outbound travel business, both SOTC and Thomas Cook on a blended basis are running their forward bookings 34% above last year. Now, even if I were to factor in some element for the depreciation in the rupee, we're still talking 28 to 30% growth, which I think is a very good indicator. We have not seen such strong growth in nearly 2 years. And I can attribute this to two reasons. One, you know, we've used analytics quite extensively to manage our leads. Secondly, we're also, you know, brought out new products which are focused on a variety of different segments. So, you know, for example, the regional tours, you know, those have taken off significantly this year. So I'm looking at the next couple of quarters. Last point that you made on Quests going out, you know, we are already factoring it out, Mangalam, and my expectation is that what we call the Quest burn in our system would have disappeared and would be replaced by two things. One, if you remember the October, November, December quarter, we did the OFS sale. So over the last 6 years, we had invested close to 1,000 crores in acquisitions. 541 has come back. Now, we'll use this to reduce our working capital, and that will bring about interest and working capital benefits to the tune of 3 to 4 crores a quarter. So, you know, my expectation is that we'll be able to offset all these numbers, and it will not look significantly different.
Mr. Menon, sir, we have heard what you had to say, sir. 3 to 4 crores a quarter. Your finance cost for last year was around 37 crores. So you mean that the finance cost will come down to sub 30 crores, maybe towards 25 crores?
Yeah.
All right. Okay. So that's one point, sir. The other point I wanted to ask you.
It will drop significantly.
Okay. All right. Point taken, sir. In terms of your financial services business, that's a smaller part of your business. Wanted to ask you a couple of questions. One is, will you be looking to apply for an NBFC license? Point number one. And point number two, will you unlock value for your shareholders? Will you look at demerging this business? Is that a possibility?
Mangalam, first of all, the foreign exchange business is the cash cow in the entire portfolio of the Thomas Cook Group. We have no intention of demerging it. It is a core business for us, and it will remain where it is. And you know, that's the way it is structured, and we will not change that. As far as an NBFC is concerned, very honestly, at this point of time, we do not. We've examined the possibility, but we've actually come up to the view that that's not our core business. We don't want to get into that. But, you know, I don't want to say never, because acquisition opportunities may come along the way.
So are you looking at applying for an NBFC license, Mr. Menon?
NBFC or a service business, I don't. No, not at all. Not at all.
Cox & Kings, your competitor, has done that. So would you not want to follow that?
Never say never. I think
never say
Mr.
never.
Menon is telling us that.
Well, you know, no, but my competitors do, competition does lots of things which I don't do. So let's put this to the fact that we won't do that.
Okay.
And finally,
Not for the same reasons,
all
at
right,
least.
all right. Finally, Mr. Menon, before we let you go, you know, can we see profitability come by in the sterling business in the next year? And what's your target out there for the operational gains coming in from sterling business?
So I think the good news in all this is sterling, where they're now firmly back, despite, I know I've given assurances of this kind in the past, but if you look at their EBITDA numbers, they're beginning to show a turnaround. My expectation is that the structural changes which they went through last year, they continue to implement as we go forward in terms of costs, are beginning to pay off, and on an EBITDA basis, you will actually see them back in a profit either this coming quarter or the next quarter.
Okay, all right, Mr. Menon, thanks so much, sir.
I'm willing to...
Thanks so much, sir, for stopping by and giving us all those views. All the best for the remainder of this year. By the way, I think we should pull up the intraday chart of Jubilant FoodWorks. That's a stock we should look at. Remember, late yesterday, Nimesh, in fact, broke that story that there is a potential reason that, in fact, the promoters can go ahead and they'll sell some stake. Now, the promoter, the management has said, no, we're not looking at that. But just keep an eye out on the intraday chart of the stock. It was up close to around 3%. Now it's moved virtually to the low point of the day. Just keep an eye out. The management has denied this, but keep that stock on your radar. Quite big volumes, actually, is what we're seeing out there. On that note, though, let's slip into a short break. You come back, continue to focus on the markets. We'll also track a whole host of stocks.
Just keep an eye out on Tata Global Beverages. That stock has moved to the high point of the day. So looks like a lot of Starbucks coffees perhaps being consumed. And talking about Tata Group, in his first ever TV interview, Indian Hotels MD and CEO Puneet Chhatwal tells CNBC TV18 about their target for EBITDA and EBITDA as well as the company's EBITDA margins for Indian hotels for FY22. Hear him out.
Currently, the consolidated, when I joined, stood at 17%, and we want to take the EBITDA margin to 25%. We did see some early success in Q4 of last year, and hopefully that will continue in the Q1 and the following quarters of this year.
If I want to look at just the pure numbers, the like-to-like revenue growth has still been 4%. So where do you see that growth coming from, and what rate of growth can investors be prepared for on a CAGR basis for the next 2 years?
We have embarked on a journey where we said over the 5 years, we will grow our portfolio between 30 to 50%. 50% is the total portfolio, of which 30% would be hotels in operation. The rest would be in the pipeline. And I think if that growth is based on profitable measures, if that growth is based on a very strategic margin enhancing model, then that should help us to grow our margins by 8%.
Can you give us specific numbers as to what the plan is for the next 1 year, and how many more hotels, across Taj, Vivanta and Ginger would you look at upcoming?
So we said our portfolio is approximately 165 hotels, and we plan to grow that to anywhere between 35 to 50%. So even if we assumed, no, over the 5 years period. So that would mean another 65 to 70 properties. So of which we expect almost 45 to 50 to come into operation. So that will get us very close to almost 200 hotels in operation by 2022.
You have 17,145 rooms that you own, and you have roughly around 1,500 through management contracts. So how would this ratio now change, since you've already said that you're looking at increasing management contracts?
In 5 years from now, we are looking at a portfolio with that 35 to 40 or 45% growth that I alluded to before, a portfolio of hotels in operation and in pipeline to be 50% owned or leased and 50% managed.
And right now, obviously, this is...
Right now, that balance is not there. We're more than 70% owned or leased.
Well, UFO Movies, that's the other stock on our radar. They posted a decent Q4. The ad revenue growth, nearly around 73% for the quarter, but for the year, it was around 20%. To discuss that and more, we have Mr. Kapil Agarwal, the joint MD of the company, who joins us. Hi, Mr. Agarwal. Thanks so much, sir, for joining in. Let's focus on that number. Ad revenue growth in the last year was 20%. This year, what kind of a revenue growth, ad revenue growth are you looking at, sir? If you could tell us quickly.
Well, we are annually, I think even in the current year, we should grow around 20% or above. That's what we expect.
All right.
Mr. Agarwal, you know, you did about 7.4 minutes of ads per show, and that compares with the peers who are in excess of 10, 12, at times 15 minutes as well. So what kind of run rate are you targeting in terms of ads per minute, rather minutes per show in terms of ads for the next fiscal per quarter?
Well, this is the kind of opportunity that we have, and in terms of the minutes, we expect that we should be growing at least again between 20 and 25% per year. So this year we are expecting to achieve the growth in terms of minutes by at least 20%.
All right, Mr. Agarwal, I want to ask you about the number of screens. I think it was at around 3,900, 3,950 odd. In this year, how many screens are you looking to add?
The number of the screen count is almost constant actually year on year now. 50 screens plus minus is what we expect, because the main screen growth which is coming in the country is coming from multiplexes, where we do not have the advertising rights. The main three chains, they sell their own advertising.
Right.
So our number of screens are constant, but eventually over a period of, I don't expect any major growth in the current year, but I think we are trying to push the growth of single screens or smaller multiplexes over a period of time. So eventually it will change, it will grow, but not during the, not a major change in the current year.
All right. Before we let you go, one quick answer. What kind of EBIT performance are you looking at from Caravan in FY19?
Caravan is expected to grow at a very healthy pace. In
Operationally,
fact,
how much would it add to your numbers in FY19?
We grew from the revenue from FY19, well, I can't make a forward-looking statement, but I think we should deliver a healthy growth.
All right.
Last year, as I said, we have grown from 2 crores to 8 crores, 2 crores to 9 crores, and again, we should have a good growth.
Splendid. All the best, sir, for FY19. We'll keep speaking to you all through this year. Well, on that note, we'll wrap up on Chartbusters, but you stay with us because Trading Hour comes up next.